Hi, this is Chuck Hughes. In today's video, we're going to take a look at master limited partnerships. I don't know if you're familiar with MLPs, but they're similar to real estate investment trusts in that they do not pay income tax to the IRS. And also, by law, MLPs are required to distribute their earnings to their shareholders. So this gives MLPs a tremendous advantage to the small investor over other dividend-paying stocks because they pay no income tax and they have to distribute all their earnings. So this is a really great vehicle for small investors to realize an income stream from their MLP units. And there's also a special tax benefit with MLP dividends, which are also called distributions. The IRS considers 80 to 90% of MLP distributions as a return of capital. And this allows you to defer taxes on the gains until you sell your units. So due to this favorable tax treatment, MLPs have attracted companies in a variety of industries like oil and gas exploration, coal mining, energy pipelines, timber, fertilizers, and real estate. So again, these companies are at a big advantage to, in my opinion, to other dividend-paying companies because they're able to sidestep the IRS taxes and pass their earnings directly to the small investor. Now, the MLP strategy is very simple. We want to buy MLPs that have a history of raising their dividends. And if you go on to Yahoo Finance, you can find out what the dividend history has been for any MLP. And secondly, I'd like to reinvest the dividends in additional shares, and this allows us to compound our returns. Let's look at an actual example of a master limited partnership. Kinder Morgan Limited Partnership owns and manages oil and gas pipelines and storage facilities. Kinder Morgan is known as a midstream pipeline company that profits from the stable flow of energy and not from the price of crude oil. So their earnings are not dependent on the price of crude oil. And Kinder Morgan is merely a toll road company that transports energy, and this is a much more stable business than exploring or drilling for energy. So although the energy toll road business is very stable and dependable, Kinder Morgan has been able to consistently raise its dividends. And I'm displaying a table that shows the total distributions that would have been paid out on a $25,000 investment in Kinder Morgan 15 years ago. So a $25,000 investment would have produced over $169,000 in distributions. And currently, because of the consistent raising of the dividend, that $25,000 investment, you'd be receiving over $18,600 a year, and that translates to a 74% annual yield. So imagine receiving a 74% annual yield from a company in such a stable industry. So again, a $25,000 investment 15 years ago, you'd be currently be receiving over $18,000 in dividends and a 74% annual yield. So this clearly demonstrates the earning power of MLPs that pay no taxes and distribute their profits directly to their shareholders. So in my experience, very few investments have ever produced this kind of return. And keep in mind that this 74% annual yield does not include stock price appreciation, and that's strictly a cash-on-cash return. Kinder Morgan has produced a total return of over 3,400% over the same 15-year period. And also keep in mind that the $169,000 in distributions would be considerably higher if the quarterly distributions were reinvested in additional shares of stock, which would allow for the compounding of returns. And we'll take a look here at a few more examples of some MLPs and their return potential. What I'd like to do is show you several more examples of master limited partnerships in different industries and compare their return to the S&P 500 index over the last 10 years. And in this first example, we're looking at a total return graph for Alliance Resource Partners, which is a coal mining and marketing master limited partnership. And over the last 10 years, Alliance Resource Partners has produced a total return of 1,274% versus 9% for the S&P 500 index. Here's another example for Terra Nitrogen, which is a fertilizer company. And over the past 10 years, Terra Nitrogen Limited Partnership has produced a total return of 3,355% versus 9% for the S&P 500 index. Here's one more example for New England Realty Associates Limited Partnership. New England Realty is a real estate property management firm, and the Master Limited Partnership has produced a 462% return over the last 10 years versus 9% for the S&P 500 index. So these examples clearly demonstrate the powerful profit potential of these MLPs, and I think they should be a part of every investor's portfolio because they've been producing great returns with very low risk. I make trade recommendations for master limited partnerships through my Inner Circle advisory service in the dividend portfolio, and I'm displaying the current open trade profit results for the MLPs, and you can see we currently have an open trade profit of over $65,000, an average return of 96%, and the current annual yield on the MLPs is 12.3%. If you'd like to get updated profit results on the Inner Circle portfolios, including the dividend portfolio, just log on to chuckhughesic.com and click the trade results for updated profit results. This is Chuck Hughes. I want to thank you for listening, and I wish you the best in investing success.